Good afternoon, everybody. Matrix here. It's June 20th, and here is a trade recap of my Oracle trade today. As you can see, here is my P&L. I took one trade on it, and basically, I'm green on the day. I'm not going to show the P&L because overall, the P&L does not matter. I just want to show you the setup, the trade, the thesis behind it, and my thinking behind it, okay? So there is the account, there's tickets and everything. Here are my executions on the day. Okay, so let's get right into it. Let's move these out of the way here. As you can see on Oracle right now, I have mapped out some of these green arrows here. These are my main entries. I can tell you that throughout the open, let me zoom back in a little bit. Throughout the open, I did make some more entries than just these three, but these are the main entries and this is the main exit. Throughout the open, I took some entries and exits here along the way for the first few minutes as scalp trades, and I'm not going to plot those out. To be quite honest, first of all, I think those entries, even though they were green, they are pretty indecisive, to be quite honest, and they're pretty much scalp play, but I'm just going to focus on the main play today. So let's pull in some notes on Oracle real quick. So Oracle, why did I trade Oracle today, and why did I pick the trade? Okay, so Oracle, this trade is called the positive catalyst opening dip and rip trade. Okay, basically the big picture is the SPY yesterday had a Fed speak, and the reaction to the Fed speak was quite positive. Okay, they basically announced that they were going to cut rates or keep rates at neutral or something like that. The overall details I didn't pay attention to. I just know that the Fed rates announcement caused a positive reaction in the stock market. Okay, and then the next day, which is this morning, the SPY gapped up over its all-time highs. And the market in itself is in a very positive mood. Okay, so that's the big picture. So looking at Oracle's fundamentals, okay, Oracle had an earnings call last night after hours on June 19, 2019. The reaction was positive. The quarter four revenues, this earnings call, it's basically the earnings call for their quarter four. Okay, the revenues adjusted EPS is $1.16 versus the estimate of $1.07. So it's a 9-cent beat, and they put out good guidance. Compared to the consensus estimates, they put out kind of like an inlined guidance. It's also positive in a sense. It's not a major beat, but it is in line and it's not a loser. Okay, so these two parts are very important. On the earnings call here, they said the Q4 operating margins is the highest they've ever seen in 5 years. Now, the market loves profit margins, okay? So that's a good point to note. Guidance for the whole year, they say the growth is faster than the last year's growth at double digits EPS growth. Okay, and once again, the market in itself, they love growth. Okay, the average true range is 95 cents. That's very important because this will this parameter will help me gauge my targets. Okay, institutionally owned is 55.3%. This is okay as a basis point of 50% institutional. If the more institution owned there is, the more likely block orders will get into the ticker, and hence the stock will be able to move cleaner. Okay, the forecasted volume every time there's an earnings call out, I anticipate massive earnings. Okay, so a very high relative volume as well. That actually means that the overall market is watching the stock and the stock is in play. Okay, so the next morning there's a lot of firms and analysts that chimed in on the ratings, and the average price is about $60. Okay, so let's bring in the news real quick here. ORCL. I'm going to open up my news feed. This news feed is free on this broker that I use called TFS. Okay, it's recommended to all newer and beginning traders. Okay, and here are the news. Okay, so I got all the fundamentals and the news out from Oracle. Basically from the newsfeed, I added all these ratings up and took an average from them and came out with an average rating price. That's kind of like a guidance to how much or what kind of target that I'll be looking for. Okay, so as you can see, all that I've just wrote is basically listed on the newsfeed here. Okay, so the price action after hours, it basically pushed and broke out the stock past its all-time highs at 55.53, topping out at 56.88. $55 is a nice psychological whole number to work with as well because of the opening print of the pre-market, and it's a nice whole number, right? Pre-market lows, I marked off. Pre-market highs, I marked off as well. And the thesis is that I'm looking for a dip at the open caused by the after-hour buying profit taking. So whoever bought after hours, okay, at any higher open, they would want to take some profits, causing the stock to come down a little bit. And then I'm also looking for a hold right here on the key support level. So for example, like pre-market lows, pre-market highs, after-hour highs, etc., etc. Okay, let me type this in here. Aftermarket highs, etc. Okay, so the target is just one ATR, which is 95 cents. Okay, from the bounce, and then I'll just watch and decide from there. So this is the main trade, a bounce, and then the potential small size hold into a swing long if the stock holds a key support throughout the day. Okay, so those are the notes. Go back, pause the video, reread them. Okay, when doing a trade recap, I do like to take a lot of notes, as these kind of recap videos are for myself as a review, and this play definitely goes into the playbook. Okay, so let's move that out of the way and let's take a look at Oracle. Okay, so pulling up the 5-minute chart. You know what? Let's pull up the daily chart first on Oracle. Expand this real quick. Pull up the daily chart. And as you can see, Oracle on the daily chart, on the big picture, zoom out a little. For the past few years, it's just been riding up, right? It's in a very nice uptrend, and basically after hours, they broke out of their all-time highs right around this area here, okay? So this is the all-time highs. Okay. Give or take 55.50. Okay, coming into the 1-minute chart, I'm going to zoom out a little bit. Okay, so after hours, as you can see, it had a big, massive push, and then a pullback on the sell-off, and then it based it around this 54 area, and then it came back up, and it basically set another level here at the 55, which was very key, as I mentioned in my notes, because 55 is a nice psychological whole number. Okay, coming over here, you'll see that I have 55, 55, 10 marked off. Okay, that is the first print of the pre-market. So if I come over here and click on, okay, 408, I guess that's the first print. Yeah, and on the top left corner of this chart, you'll see the opening price here at 55.12 and 55.13. So this first print, I usually mark off on a daily basis with a blue line. Okay, this is very close to 55, so I do think it was significant. Now, while I was watching this in the pre-market, it sets a pre-market high and low around this area. So pre-market low was right here at the 55.50, and then pre-market high, it actually came all the way up to here to 56.50s. Okay, so what I was watching in the pre-market is that it was ramping up, right? And then right before the a little bit 15 minutes before open, it starts selling off already. Okay, so this is caused by a profit take. It had trouble at 56.50, so right at the open, it opened right here at around the 56. Okay, you see the pop, which I actually took a few trades of I think I waited. It opened. I think I waited for the dip to open, and then I got in around this area, and then I took it off right here. We see the pop as it reaches the pre-market highs, and then it come down again. This first candle very significant, as it indicates at least, if not the highs, then the lows of the opening range. Okay, and then from here we got a sell-off, and then on this candle, this was significant as well. The second candle, as I was watching this come down, it couldn't break past the prior candle's lows. Okay, so from here, I'm still watching, and here as well. This is a dead giveaway. The second candle. Okay, so we have major volume coming down on the pullback. Okay, first candle got a major volume buy here, as you notice the candle, and then a major pullback, and then this sets in kind of like a low on the day, and it's still holding above the pre-market lows here. Okay, from here on this candle, this is a dead giveaway to me. This is basically a key signal that a reversal is about to happen. Okay, because if the stock was supposed to keep dumping, where is the follow through, right? Where's the follow through? Okay, on the next candle, when it came down, okay, so I see some follow through, but it got bought right back up right away. And this is the deciding factor for me when I hammered it in. When I first started in, I didn't hammer it in, I just started in on a starter size, and then I can base my risk of these lows over here, as well as the pre-market low, as you can see. As it comes up, once it reclaimed a nice psychological whole number of 56 right here, it reclaims it. As it came up, I took some off as well, and then when I saw this 50 EMA reject, I was just holding, and then it reclaimed this 56 as it bounced once again right here, dead giveaway, no follow through. Okay, how come? Why is it, if it's weak, it's supposed to follow through and keep coming down? However, there's no follow through. So on this candle, I added and I jammed it in. It pushed through, and then let me move this arrow out of the way. The next candle was very indecisive as it reached its opening highs right here, and then however, it held the lows as well. Okay, so know that I did jam in here, and then on this next candle, once again, no follow through to the downside. On this next candle, the conviction was real, and I basically jammed it in. Okay, and I hammered in all my size as much as I could handle to my risk, and then I was just risking a little bit under this 56 area right here. Okay, this was my first risk target, and then this is my second risk area, and then a break of this would basically tell me that the stock has failed. But over here on this level, this is very key as it broke out, right? It's a psychological whole number of 56. So that's why I added a lot of size into this and just rotated it, anticipating the breakout of the pre-market highs. As it broke out, I took profits on every push right here around the highs. When it came down, because this was a little bit overextended, when it came down, when it came down and held this pre-market highs, this could have been a signal right here to add, right? And if you were to add right here, you would risk a little bit under, probably around this area, right? So this was a good signal to add, but I didn't add. I just watched it as it held and bounced. Now I was very, this confirmed that the stock can run, and I was very convicted in it. So basically pretty worry-free, and I just watch it break out. This 56.88 line here, this red line, this is the after-hour highs, okay? As it was coming close to it, I took a little bit off some more, and then I just let the rest ride. Okay, when this thing got overextended and came down and it refused to hold this breakout area, I was actually looking at the 57. Yeah, this is the 57. It couldn't hold the 57 area as it was coming down. That kind of signaled me and indicated to me that the push was over. and that was a reason for me to sell as it snapped down under the 57 here. So I sold right here at 56.92, 93's area, and got out of the trade. But this was the trade from here. Okay, starter size, jam in, ride it all the way, take profits as it goes up, came down. It broke the pattern of holding its previous breakout areas. Okay, so here we have this previous breakout area. Here we have another breakout area around the 57. It broke the pattern, right? It doesn't hold. If it was still continuing to go, it was supposed to bounce from here, but it didn't. So once this broke out, that was my reason to sell and get out. So that's basically it for the Oracle trade. I hope you guys enjoyed what you watched. Make sure you hit the like button. Now, before I go here, I also want to talk about this Oracle trade though. Aside from it being long, most of the time when a stock is so overextended like this, even on a positive catalyst, okay, it can only do one of two things, right? Either it runs or it fails and fill the gap, right? So I had a thesis planned out for both sides, right? However, because of the Fed news, because of the bigger picture, I stuck with the long side first. I was definitely paying a lot more attention to the long side of the trade. However, if the pre-market lows right here, if it had came down, I would have just stopped out and reassessed the situation. And what I would be looking for is to see the 55 hold and then try it again. Or I would wait until it snapped down, come back up, and retest it and fail and start to roll over. And I'll short it to fill the gap to the downside, probably right here to around where it broke out, around the 54 area. Okay, so definitely two ways to trade this ticker. However, I do like the long side a little bit more on this trade because it's a positive earnings catalyst. The stock is breaking out to its all-time highs. It's a little bit more dangerous to short something that's breaking out its all-time highs, right? So I stuck with the long thesis, and basically that was it. Now, as you can see, Oracle, eventually it bounced once again at some nice key levels right here off the VWAP. This could have been a trade. As I took this off, I was just waiting and watching, and this could have been a trade right now as well, right? On this double bottom. I was actually watching it over here. Once I saw this bounce off the VWAP, I was watching it over here, very tight range over here, and I was watching it test the 57. So from here, this was a nice entry area on specifically on this wick right here. Let me zoom in. On this wick right here, this was a very good area of entry because it was basically proven that it will no longer go lower, right? As you can see right here, it was proven that it will no longer go lower. This would be your risk area, okay? If it snapped under, then you would get out, right? But on this little breakout wick of the candle here, this is basically the entry signal as well, anticipating the break of 57, which is right here, anticipating the breakout of 57, and you would ride it back to its previous highs again. Okay, so previous highs. Now coming over here real quick, average true range 95 cents, right? So look at where the stock came from, right? 55.50, okay, in and around 55.50 all the way to 56.50. This is one range, and then from 56.50 all the way to almost near 57.50. That's two range, but the real trade was right about here. Okay, so if we're gonna look for a dollar from here at 55.75, average true range to 56.75 area. Okay, that's basically it for the trade. And yeah, that's basically it for my recap of the day. Let's get into bonus here while I'm doing this, because I don't want to make another separate video here. Work, WORK, okay, is a very highly anticipated IPO today. And basically, I missed it. I was watching it. I didn't have a full intent of trading it, but I do have a full intent of watching it. Okay, now the reason why I want to do a little talk about on work right here. Oh, it's double topping. Is basically because it fits in, the long itself fits in with the trade with Oracle. As you can see, as it's coming up in the morning and then it failed, it starts to set a trend, right? From here, every time it was going, I was marking off some key levels here. I want to zoom in and show you the open. What I notice is, first of all, as it opened, I marked off this blue line, the opening price. I saw it dip and hold. And then I saw it had trouble getting over 39, but reading the tape, it was a lot of green, just like this, right? And eventually it broke through. I could have bought it right here, risking the blue line, anticipating the breakout, but I didn't. Even on the third candle, as it came down and held this opening print on this blue line here, this could have been a trade. Had I took it right here, I would have risked the lows of the previous open, right? Coming over here, you see that I did mark off every level when the tape kind of stalled and there was a fight between the buyers and sellers. This little bubble here, this is the mark, 9th minute candle where the 9th EMA happened, okay? And it's basically $40.45. So I marked it off as orange right here. And zooming out a little bit, I see the stock had trouble around this area, so I marked it off as well. And from here, I see the bounce at $40, key psychological whole number, okay? So I was basically marking off all these as I was watching the ticker, okay? Eventually, the stock came down and held a trend, and now it's still holding this trend, okay? So that's basically it. I mean, if you missed the entry right here at the open, I should have took it. I was looking at it. This was basically one of my edges. Missed it. Saw this happen. I had this 39.70 level marked off from here. This little break here created this level. Okay, it bounced right off the trend, and now it's gonna come back and test this trend again. Notice this orange area, this orange line, the first mark of the 9 EMA. Right over here, as it came, as it bounced through, it made a very tight range in this area, and it held this 40 as well. So one would definitely be able to take this trade, okay? So this is a higher low from the previous low, a higher low. You have a nice consolidation range, anticipating the breakout. This could have been a trade right here. You had very tight risk and ride it back up to the highs, right? The highs is actually at the 42, so had you took this trade here, this was an entry signal as well. Coming up over here, we see a pop through and down, and then once again you see a nice consolidation level right here. Okay, so when I'm trading, these are the type of signals that I'm looking for. I'm looking for a very nice tight consolidation level, okay, where it's refusing to break down, and also holding a higher low. So we have a higher low right here on this first low, right? Higher low, and yet another higher low. Okay, so this is basically an ABCD pattern. So with A being the push up, B with the first low, C being the higher low, this was the trade. And then you would supposed to be taking this trade and ride it all the way back up to the highs, and that's the trade. So make sure you hit the like button and subscribe, and I'll see you guys all bright and early tomorrow. Thanks for watching. Ciao.